This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 251 is brought to us by Apex Omni. Countries lately and more are trying to get all up in your business. It doesn't need to be that way. We have options now. With Apex Omni, you get to trade just like you would on Bybit with most of the benefits, notwithstanding your very own customer service rep, which is absolutely unheard of in DeFi, but not when you're with me. But you have to use my link. My link can be found down below in the Apex Omni blog in the show notes. And clicking that link unlocks everything. All of the promotions, all of the giveaways, and your own customer service representative you can call on at any time. I'll remind you too, you also have to deposit and trade. For some reason, some of you are just signing up as a placeholder. That gets you nothing. You got to be active, and you should be active because with Apex Omni, trading is your business. It is the 10-Minute Contrarian Podcast, and this episode is actually going to be a bit more important than it may look on the surface. So what we're doing is we are taking 5 of the phrases we like to use here on the show. Most of them I'm pretty sure I've made up, and so even if I'm wrong about that, chances are pretty low that you're going to hear these anywhere else, or have heard them anywhere else. So if you're new, for example, or you've just forgotten, there are very specific meanings behind these phrases. And this episode is really, when it comes down to it, a psychology episode. Because we're going to go over the psychology behind all 5 of these and why I say them so often in the first place. Because there is a very specific mentality you need to have to be a real contrarian investor. And I don't even think my own audience, for the most part, has it all the way. And you know what we say on this, the entire YouTube channel of No Nonsense Forex, psychology is everything. If you don't have it, it doesn't really matter what else you have. Even though it never got a whole lot of clicks and views compared to the other material I did, I realized right away just how important it was. And I went all in on it. Wrote a book about it, made an entire podcast dedicated to it, psychology that is. Because again, without it, you're really just a content consumer who never pulls the trigger on anything, or you do pull the trigger, but you end up messing it up. And so it's all for nothing, really, at the end. So again, what we're going to do, we're going to go one by one here and talk about why I say what I say and the psychology behind it. Maybe you didn't know there's actual psychology behind these sayings, but there absolutely is. And we will begin with one that I have described recently. And here's the thing, too. I don't want to describe these things every time I say them, and I'm starting to do that, and I would rather not have to do that. So let's just go over all 5 of these now, starting with the mushy middle. Now, when it comes to contrarian investing, there is one very non-negotiable way you need to approach this. And the psychological aspects here should be obvious, but I say it a lot. There's trading short-term, which is fine. There's investing long-term. Like everything you put your money down on, maybe minus energy, should have a 5 to 10 year time horizon. And there's some aspects of energy where you legitimately could have a 5 to 10 year time horizon, like uranium, for example. But if it's something like oil, okay, I can see the case for being a bit more short term there. But with investing, and this is an investing podcast, this has to be your outlook. So what you really need to do is do what any investor should be doing, is make sure you are investing money you can easily afford to lose. Not that you would want to, not that you're going to. This can be your, quote, life savings. But you absolutely cannot look at it that way. And the reason is all because of psychology. If you look at it that way, and price starts to go down, maybe even a lot, you're not going to do the right thing and buy more. You're going to do the wrong thing and be more inclined to sell at a bottom. I cannot explain to you the luxury we have being long-term investors like this. All the greats do it. And it's such an advantage because you almost don't have to be that good at investing anymore. If the thing you're measuring the investment against is something like fiat currency, well, then it's probably going to go up no matter what it is. And now it's just a matter of picking things that go up even more than that. I mean, it's such a rudimentary way of explaining investing, but that's not far off. But the problem is almost nobody has this time horizon, and media is not completely stupid. They're not going to pander to people like us, the small minority. They are going to pander to the people in the mushy middle. And so not only do you have most of your people existing there, all of social media, all of traditional media exists here as well. And so your average person, especially when they're starting out, is just going to think, oh, well, this is how I'm supposed to approach things. And they do, and they get destroyed. Because there's just so many things here, so many things completely outside of your control. We say this in trading also, that exist here, but absolutely don't have to if you don't want them to. Perfect example is the war in Iran. We don't really care about it. I had a few dedicated episodes to what's going on to kind of serve as an example of what to do and what not to do during times like this, because they are going to come up. Media is going to freak out. You're going to see it. And I feel like it's my job to kind of reel everybody back in. Say, hey, look, these are the possible implications. They don't really affect us, but this is how you can actually take advantage of times like this. But in the investing world, during times like this, all the mushy middle people are losing their minds. And I've said before, man, the 2020s are going to be crazy, and they're only going to get crazier. If you think you've seen the worst of it, I don't think you have. Transitions are bloody, and we're in one. We're in the fourth turning. And the worst place you can be is in a place to where you are concerned about your money every time something like this happens. Why on earth would you want to be here? You are allowing all of these external factors which you cannot control, to determine the future of your investments. This is just insane to me. I know there's some people who are good at this, who exist in this space. But man, you can just tell they're haggard. They have to be on top of this stuff all the time. And they got to move in and out. Wall Street is like this, unfortunately. And people see that and they're like, oh, I want to be like Wall Street. No, you don't. 95% of Wall Street can't even outperform the S&P 500. Why do you think that is? You ever think of that? Because Wall Street has a huge disadvantage. They have to make their quarterlies. They have to make their yearlies. So they absolutely have to exist in the mushy middle. People who invest in the S&P 500, like an index fund, for example, get to sit back and do nothing and just let the instrument do what it is there to do. And your grandma, who knows nothing about investing, gets to outperform Wall Street every single year. And it all comes down to time frame. Yet again, psychologically, we have to fight everything we see in mainstream media and social media all the time. It is there to take us off course. It doesn't mean to, I'm sure, but you have to constantly be aware of this and do not let it distract you from the right answer. And you should know what the right answer is. There shouldn't even be a debate. I would love somebody to try to come in and debate me on this. I'll just sit there and point to the scoreboard. You must have a 5 to 10 year horizon, if not longer, for every single thing you invest in, minus a very small handful of things. Do not ever get caught in the mushy middle. Don't ever sit there and say, oh, I don't know, this time it might be different. I'm telling you, bro, if you go back to a long-term chart and look at every dip, sentiment was terrible. And everybody was feeling the exact same way you feel right now during this dip. You just allowed yourself to get too caught up in it. Don't ever. I mean, we're going to have like a legit recession here, it's probably going to be pretty bad. But if you're positioned for it, which we are, then it is nothing more than the opportunity of our lifetimes and should be looked at as such. All right, we need to move on from here, or else this episode will go an entire hour. But that's the one I really think I needed to spend the most time on for obvious reasons. But let's go ahead and move on to number 2. Number 2 is something maybe I don't say as often as I do the other ones on this list. So it's probably a good time to point it out now. But number 2 is we invest in things which are inevitable. So this builds off the first one. If you really do have a long-term time horizon, you want to invest in sectors that have almost no chance of not being part of our future. Things which are just going to happen no matter what. Now, is there ever a 100% chance of these things happening? Of course not, but you want to get it as close to 100 as you can. Pretty safe to say gold's going to be here in 5 to 10 years. I'm no futurist, but pretty safe to say that Bitcoin and the blockchain is going to be here. AI is going to be here. We're going to need energy. I think I can probably go 100% on that one. I don't think we're going to invent cold fusion in the next 5 years and then be able to scale it. That sounds ridiculous. But you get the idea, right? If you just start from there, again, investing actually becomes pretty easy because then you just take a top-down approach. From there, this isn't one of our quotes, but this is what we do. We look for the best of breed. Okay, if this sector is inevitable, which companies are probably going to be inevitable here too, minus some Enron type fallout. And again, when you have a lot of positions on the board, if for some reason you do run into that weird Enron type scenario, it's not going to hurt you too much. You can have a position go to zero, and it's not the end of the world. But when people don't do that, and when people only have a few positions out there, they become too afraid to lose. And even in sectors which are absolutely inevitable, they're still afraid to invest in them, and they actually think they would be better served holding fiat currency instead. So yes, there is absolute psychology here. You can really rest assured and go with confidence if you are investing in inevitable sectors. As long as you're not going too far up the risk curve. And again, if you have 30, 40 positions out there, you could go further up the risk curve. And if you take a zero, it's not the end of the world. You certainly don't want to take too many. But as far as blockchain tokens go, if you already have Ethereum and Chainlink and Solana and Aave, well then, yeah, you could hypothetically take a chance on a lower market cap token. One, just don't do it too often. Two, if that token doesn't make it, then who cares? Most of your other tokens are probably going up. And if they're not, your mining stocks are probably going up. Something's always going up, especially long term. Remember, don't forget, we're looking long term here. There are going to be 3 to 4 month stretches where our entire portfolio is probably eating it, and that's fine. That's normal. Price moves in waves. But if you just stick to sectors which you feel are inevitable, and there are many of them, you should really never be afraid to invest or afraid to lose. Because the alternative, fiat currency, is a definite losing proposition. It just happens more slowly. If you're the scared type, that should scare you more than anything. For the longest time, you could just take no risk at all and be fine. But that's not the world we live in anymore. The riskiest thing you could ever do is sit there and be afraid and do nothing at all. Just remember that. Take risks, but learn how to mitigate those risks. And one of the best ways you can do that is invest in sectors that are going to be part of our future no matter what. Moving on to number 3. Number 3 is when I say that I like to buy things that are cheap. Now, this sounds kind of obvious. Who wouldn't want to buy something at a lower price than a higher price? Now, there is a time and a place to buy when the price is a bit higher. We'll talk about that later on. But The reason I say that is exactly what we were talking about before. When price drops, for some reason, that's exactly when people don't want to buy. Now, why is this the case? Well, there's two reasons, I think. One, people get caught up in the hype cycle and they think these things are just going to go up forever. And so when they don't, and they actually go down sometimes, or they go down a lot, all of a sudden they think it's no longer a good buy. Contrarians, this is type A mushy middle behavior. If you are a real contrarian, these are the times when you are supposed to buy or supposed to add on to your position. Yet because price has dropped, and what always accompanies a fall in price, negative sentiment from investors, from the media. Is this the end of Bitcoin? How many times you heard that? Yet people still believe it. On the 8th time, they're like, oh, this is it. Or, let's add another saying to this. This will be number 3.5. This is something we added probably in the last year or so. The old Mike Goldberg, the old UFC announcer. Whenever I say, oh my God, it's all over. Because the absolute absurdity of thinking just because price has fallen, this is all of a sudden going to zero. Or because of one data point or one rumor that may not even be true and often isn't, that is a good enough reason to think something is cooked. I hate when I hear people say that. It's just a sad commentary on the nation when that's all it takes for somebody to give up on something. But again, this is your average person these days. Contrarians, there is no competition out there. It's not like we're really in competition with these people, but if these people are willing to give up based on price dropping, which all prices drop because price moves in waves, or one data point is enough to completely take them off of an investment, what are we doing? It's not time to sell. It's time to buy. These people are selling at bottoms. Every time it happens, they're selling. So as a contrarian, we want to buy. We want to do the opposite of what these people do. Why wouldn't you? Why would you ever want to be like these people? These are the exact type people that give us these opportunities on silver platters every single time price drops. And we should be grateful for them. And we should take advantage of them. And that's why I say all the time when price drops, how much I like to buy things when they're cheap. Because I still feel like too many of you out there are avoiding things because they're cheap. Stupid, catastrophizing, mushy middle behavior. Always do the opposite of what these people do. So number 4, and I'm very proud of myself for taking 5 sayings and actually putting them in a proper order here because they really do build off of each other. And number 4, if I said to you, okay, if you're a fan of the show, and I said, what is one of the top things we say on this show that we kind of came up with? One of those things is probably going to be sweet divergence. Now, sweet divergence, let's go ahead and define it fully. If you don't know, or if you think you might know, is when the price of something drops, but it had absolutely nothing to do with the fundamentals of that particular thing. It just dropped because the market dropped, and people, scared, mushy middle people, freaked out and said, oh my God, it might be all over, and so I need to get liquid. This happens in crypto all the time. The war in Iran has absolutely nothing to do with Chainlink, but you will see the price of Chainlink drop anytime something like this occurs. This, again, just like before, is an absolute gift for real contrarian investors and should be treated as such. I'm telling you, this is just the best way to invest for so many reasons. But this is one of them. We just keep getting gifts over and over from these poor mushy middle people who run around with their hair on fire all day. I don't know, man. Couldn't be me. I'm so happy to be on the other side of this. And when we all look back 5 to 10 years from now, and we can point on a chart to all those times where price dipped for no good reason and we scooped up and bought, I mean, I feel like these opportunities will always come, like for the next 30, 40 years of our lives, but they sure are happening a lot these days. And my only regret is I don't always have the dry powder to take advantage of them every time. But when I do, believe you me, I'm taking advantage. And you certainly should too. Because again, from a psychological standpoint, we see this happen and I don't know what it is. Our little monkey brains are like, oh no, price go down. This is bad. No, it's not, stupid. It's amazing. Buy during these times, not when price is raging out of control to the upside and all the media is behind it. That's the wrong time. The only exceptions here are things which are better money, like gold, Bitcoin, and you could make the case for silver as well. There's never a bad time to buy those. But with everything else, buy when it's cheap. Buy when it drops for no reason. Not the opposite. Again, you guys are too afraid to lose. So you wait. You're like, I'm going to wait for confirmation that this thing is really, really on its way up. Now, you can do this with charts, but you're typically getting in at a much lower price than you are when the hype cycle finally starts, which I guarantee you is what the majority of you are doing. And we have to get you off of this. Because if all things were absolutely equal, a real contrarian 5 to 10 years from now is going to end up with so many more shares than you are, all because they did it the right way instead of the wrong way. And that's where I am trying to get you. But be honest, you make this mistake sometimes, don't you? And that's why we need episodes like this. So we'll move to the final one here, number 5, and it should be fairly obvious what it's going to be. If number 4 is sweet divergence, number 5 is sour divergence. And man, is there some real psychology here that needs to be discussed, because the whole reason I call it sour is because even though it's amazing and should be taken advantage of every single time, almost nobody wants to. And it just has this sour taste in your mouth like, man, I really don't want to move on this. At least with sweet divergence, that plays into our cheap, discounted minds, right? A lot of you out there are still super cheap, and you look at price instead of value. This is a big problem everywhere in the world. We have been programmed to look at price before we look at something like value, especially in the investing world. And this is, again, why the greats are the greats. They understand value more than your average investor does, by far, because they look at things through that lens. So sour divergence, if you don't know, is, let's say you have a sector that just, I'm not going to say crashes because that's so dramatic when people use those words. Crashes, it's in shambles. They do this on purpose. But let's say you see a big move down in the transportation sector, for example. But for some reason, United Airlines didn't move down hardly at all. That's sour divergence. That says a lot about United Airlines as a company, and it says a lot about their investors. Even in a, quote, crash in the sector, investors don't want to get rid of that stock. Like they more or less just revealed the answers of the test to the world, that was probably one of the strongest stocks in the entire sector. And so even though you're not getting this discount like your monkey mind wants, the whole investing world just revealed the best value in the space. And if you're interested in that particular sector at all, whether it is transportation, whether it is crypto, you should be jumping at the chance to buy things like this. Because chances are in the future, when we have moves down in the market, that particular investment's probably going to stay pretty strong. And if it's going to move up with the sector, but not necessarily move down with the sector, well then what does that mean overall? It means overall it's going to move up more than everything else. And isn't that what we're looking for? Again, this does not play into our monkey discount minds. But the real G's out there, the ones who can see value over price, they love sour divergence. Hell, they're the reason it even happens. And if you look at very long-term trends, and even long-term trend lines for this purpose, There are sectors out there who just never come back down to certain price levels. It's always lower highs. So you can't sit there with that discount mind and say, I'm waiting for Bitcoin to come back down to 20K, for example. It's probably not going to do that. So you have to look for moments of sweet divergence and sour divergence alike. They're both equally important. And those two things are what should be signaling you to buy. If you're ever wondering, I like these things, when should I buy? Well, 9 times out of 10, the market's going to hand these opportunities to you on a silver platter. And they go by the names sweet divergence and sour divergence. And that is your signal to buy. Simple as that. But again, the whole reason for this episode is you are naturally not going to want to buy when price drops, because you allow all of this mushy middle media to sway you. And I know it's tough, but it doesn't matter. The right answer is still the right answer, and that is never going to change. So if we see a big decline in price and the things you love are on sale, but you still don't want to buy them for some crazy reason, then come back to this episode. Because these phrases and these sayings are nothing without execution. And it's why I say the other phrase that doesn't even get grouped into these 5 at the very end of every episode, because you have to understand this mentality, or else it's pointless. But when you're in such a minority like we are, and the great investors of the world just also happen to be in this minority, but at the end of the day, you have to understand that even though we're in such a small minority here, that we are not crazy. We are just early.